Hey everybody, welcome back. A lot to go over, especially with today's action in tech. We're going to jump right into it. I do think it's important to look with the weekly because we started obviously on Saturday. So I want to just drill into the weekly and see what's going on here. And we can see on the ES, the S&P 500, we still have the doji. So if we just pay attention and drill this in, we could watch this level. Now I'm going to give you some levels that you might want to pay attention to tomorrow. That's going to be one of them. You're definitely going to want to watch this line. I think it's pretty important that you try, keyword try, to have an inside week here in the S&P. Watch the 54.89. Now, there's a couple signs going on here that might not be the case, and we'll go through a couple of them. But if we look at the hourly here, this is not exactly shaping up to make me feel warm and fuzzy, and we can all see it. It's kind of like a broken left head and shoulders. There's a couple things that I will overlay here just to point out that I think are very important. There's some indicators now that I'll start using. Everybody knows that if you've been watching these videos, you know that I will use a very specific cloud indicator that I created. It's not rocket science. I'll go over it as well. But when I have this on the ES, in other words, this is the Ichimoku cloud. This was actually one of the videos that I did on the educational side that probably had the most views of any video I've ever done. I really like this because it took the guy 30 years to develop. It's always funny when someone uses it once and tells me either once I'm using it wrong or two, it doesn't work. It took the guy 30 years, maybe spend more than a weekend on it, maybe understand there's more than one way to look at a data point. But when I see what I'm seeing here, I have to pay attention to this. And when you start cracking and this becomes weight, if you think again about this is like trying to do a push-up and you've got a weight on your back, it's a little harder. Where if you're underwater and you're sitting on a ball full of air, it kind of lifts, right? So if you think about it from that perspective, and what's important about this is to drill out and look at the probability of this happening. So if we look at 24, and I go and take a look at 24, and you'll see where I'm going with this in a minute. And if I take off just the price for a second, that's all I've done here is click this button and take off price. And sometimes I'll do this with indicators because it'll just give me a better sense of what's going on, right? Because all these indicators are just determined by price anyway. So what is this telling us? We've had a couple spots here where we started to roll, and that started up here, and that led to this, and we had this as well. So when this happens, is it usually a one-time thing? Not really. At best, you consolidate, right? And that's kind of what we have to take away from this today before we get into any other data points. If we look at what happened on Friday at the close, and we look at this data point that happened here, when this finally broke on Friday, that's when this happened. And then you're coming into Sunday and then the weekend. That's really, you're unable to get away from that. Now, if I just overlay this, and again, I use this private cloud, and you'll see one of the reasons that I do use this cloud is it gives me an indicator before this cloud, right? So, I mean, cloud on top of cloud. But when I have all this stuff stacking on top of each other, and candidly, I don't even use for this, I wouldn't even use the smaller cloud. There's also the 20 EMA on there. I wouldn't even use that. But when I have this stacking up like this, I have to pay attention to it. So if you look at the most underperformance of any period of time in the S&P, if you go through this on an hourly chart, it's going to be when these two are aligned. You're not going to have anything even remotely close to that. So in other words, if I'm green here, right, and this still turns red, I don't really care as much. But if I have both of them and they're stacked like that, I need to pay attention, especially to me when they're stacked with the cloud. You might want to pay attention to this part of it, where the cloud is below this cloud. It shouldn't be. This cloud should not be below that cloud. I can get into the specificity of it, but it's based upon the way that they turn. This cloud has different indicators based upon this. If you look at the Ichimoku cloud, it's actually calculated more on the highs and lows than it is based upon the entire meat of the move. And this one's also longer in the tooth than this one. So it shouldn't really be doing that. That's why the longer the move should be going up, and it's not. So when you see that, again, I use these primarily on an hourly. Now I will use ES. I'm spending some time on this on purpose on a daily, and I don't see an issue there. On the 4-hour, you're golden. It is very rare to see this out of pocket on a 4-hour chart. And when it does, pay attention because it's really pertinent. But on the hourly, it's telling you, and now the way that they're aligned, like, hey, we might have a problem. And I think this is an important distinction to say, and I don't know why it just doesn't give me NQ right away. I appreciate all your feedback, by the way, on Saturday's video on the educational side. I have a lot of comments on the options. I did a price action video, which I will link at the end of this one along with Saturday's video. So you can pick if you want to watch the price action video, which will be the 12-minute one, or catch up on Saturday's. Saturdays is going to be imminent to what's actually happening this week. The price action is something that you can use. It's a strategy that's actually pretty good in this kind of environment. It'll keep you out of harm's way, that's for sure. It would have kept you out of harm's way today, that's for sure. But again, see how we broke here on the cloud, on the NQ, and now you're riding it down. You can't even get over it. You might want to use this. Anybody can use these. It's Ichimoku Cloud. Instead of saying, well, why can we use this? You just want to watch these. I go over them every single morning for you guys, pre-market live. It's just, I need to put the brakes on. Did I want to put the brakes on today? No. I actually came in today thinking, you know what, we could flip back up. That's where my head was. We could actually flip back up here because of the dojis that I saw on the charts. Man plans, God laughs. That's obviously not what happened. And that's why I trade what actually happens and not what I think is going to happen. And that does save me an inordinate amount of money. I learned that over 25 years of trading. But if we're looking at this, then what is this telling us? Well, it's telling us a couple things. It's telling us that we need to hold, and it's telling us that we don't really have a driver right now. Now, what was most troubling to me was the drivers that we had, they faded. And I'm going to say that again. The new drivers, the leaders in the market, they faded. That's not great. Now, we could say that's because of the skew, and we're going to go over that. We also lost a major buyer today. We know that we lost those buyers on the 14th, and we're going to go over those buyers again, too. We know we lost those, right? I've been pounding the table on that. But your comments have reminded me, and this is why it's so important that you guys comment. Even if I don't respond, I read them. Your comments are why I'm going over these concepts over and over and over again, and specifically with news-driven events, because that allows me to know to, hey, point it out again. This is why this is happening. Again, you do this for 25 years. You think people know some of what you know or know exactly what you know. And you think you're just pointing things out, right? And you think you're giving information, not education. I hope that makes sense. Anyway, you didn't break the 12, but where's our leaders? Well, this was supposed to be our new leader, Cloud. Now, you remember, I talked about software a lot. Is that our new leader? Well, it looks like that. It does not look like that's our new leader. I mean, there's nothing really to say or do here. And this was really disappointing. And I'll explain why. Because what they did was they bid us up to lure us in to pull us down. They bid us up to lure us in to pull us down. That is not behavior that you want to play with. Okay. When you see that and it happens to you, and it happened to me today, I want to be really clear about this. Okay. So you have to realize this is going to happen. You have these breaks. That's gone. This is a bar that you have to pay attention to. This is a control bar. Let's go through this. I mean, this fits everything in my criteria that I would look at right here, right? Now, you don't really have the best volume, but I'm over in all my indicators right there. And I'm over there in the middle of the day. 10 o'clock, I'm over. It's not like it's the beginning. I'm over right there in all my indicators. So everything is firing on all cylinders. I'm aligned. You're above everything. You're breaking out of your base. You have the retest right here. Watch this. Let's clean this down to a bear chart, and you'll see what I mean by this. And this is just plain old mean when they do this. Like, there's no reason to be this mean. But you see the test, and then you fail, and then you come here and you test, and then you break out. Okay, that's what you call a retest. And then you got nothing but blue skies above you. Well, apparently you had clouds, big, ugly, rainy clouds, because we didn't have blue skies, right? We just got completely Matumboed. The retest, you're like, oh, we'll retest and we'll go. And then I get this nonsense. Now, is this the end of something like this? I don't think it's the end of it, but this behavior I have to pay attention to, because it wasn't one name that it happened to. They did this a lot, PANW. They ripped it like it was going to go. Look at this chart. Look how beautiful this chart is. And look at how this looked in the beginning of the day. So again, you can always look at this stuff in hindsight, but we ripped like we were going to come out of the gate. And this was another one I got stopped out on. It's really important for me to point out not just the trades that work, but there are trades that don't work. And this was one that it did not work. When people ask me about my methodology, why did you do it? Well, I thought it was going to go higher. It didn't. I still see a cup. I still see a handle. I still see a breakout, but we failed. Now, we can all go look here and point and be Captain Obvious and say, well, it failed because of that wick, and wicks are price rejection. Okay, and then if it broke out, we'd be saying, well, I was clear it was going to go through and it was going to gap fill. You can only do what's in the game when the game's going on, right? We can all look at the tape of the game after the game. It's called Monday Morning Quarterback. All we have is what's going on, and we have to look at this data. So then we would go back and look at IGV. And this is where it gets a little more troubling for me, because IGV didn't lift. And you would say, well, why is that an issue? Well, you'll remember a couple of weeks ago, I went through this pattern and I said, there's a divergence here. And one of these has got to give. And again, I should probably timestamp some of those other videos so I can just drop links in so that you can watch them again. But the point that I was getting at is this divergence does not exist, only in like fantasy land. But if you come here in reality and we look, and we go back as far as you want, I don't really care. But if we look at this divergence, and we'll go back to 20, why not? We'll go back to when they pumped us full of 1.7 and everyone thought they were a genius, right? You know, everyone was like, oh, it's so easy to make money, I'm so smart. But look at the divergence that you have going on here now. That's huge. And if you measure this discrepancy out, you'll see that this is one of the largest that's out there between IGV and semis. It's pretty rare. You kind of had one here, but nowhere near to that magnitude. And you can always just measure these moves. Just drop a measuring stick and go, okay, well, that was about 28% off. And then you'd go here and go, even if you just use the peak for now, and go, okay, that's double the move that you had back there. So my point was that something's got to give. What I was leaning towards was IGV is going to go towards semis. I may have to rethink that now after today's action. And we're going to get to that. And I think that's important to get to. Also, how to trade this kind of market is going to be really important. And before we get into that, I do want to just review one of the concepts again that I think is pertinent for people to get. Now, I'm going to get rid of this line along with it. And we're going to talk about the socks. But I think I want to talk about the socks here. And again, there's parts of this you're going to want to watch again. But my theory going into today was we have a doji. Dojis are signs of uncertainty. We're probably just quick flush, 5 trillion. They put money to work. They're going to come back, right? Wrong. They gap filled. Now, is that gap fill going to continue? Here's the thing. Nobody knows. You closed at the low of the day. You're going into Micron's earnings. AVGO, as I have said historically, marks the high of tech runs, and then they fall apart or consolidate and then set up again. We can review that chart in a minute. But let's review this. So here's the 12, here's the 22, and the 55. That's what I use. You should use what you're comfortable with. The 12 to me, and I'll state what they are to me. The 12 to me means, should I swing trade this sector or not? Remember, everything I look at one very specific way. I look at index, then I look at sector, and then I look at stock. I do everything top down. I don't do bottom up. Everything's top down. I think everything's connected. So that's how I view the market. So for me, swing trade. Do I want to swing trade this, right? Probably not once I'm below here. I would avoid the swing trades. Bulls or bears are in charge of the sector. If bears are not in charge of the sector or bulls are not in charge, then what side do I want to be on the other side? Why do I want to be in charge of something or trading long something if bears are in charge of it? I don't. These are demarcation lines that don't make me money. They save me money. Hopefully that makes sense, right? You know, your goal is to just have as little drawdown as possible. Now, if we sit here and take a look at the 55, you can see right there, it's a long way down, guys. And can you get there? I mean, we were there in May. You could probably get there if somebody sneezes wrong or Micron says, you know, the wrong word, whatever word that would be, like gross margins are weak and, you know, then we're down. I mean, anything can happen here, guys. That's not really the end of the world for that to happen, right? For that to drop there. And just for point of reference, it's 5%. And you have the rule of 3. I don't know if you guys remember the rule of 3. I went over it before, but the rule of 3 just basically states that if the Qs, before we get into it, if the Qs drop 1%, then the stocks can drop 3%. And if the stocks drops 3%, then a name could drop 9%. Think of it as the rule of 3. If you think about it that way, it'll make sense to you, right? And you'll be looking at those leading names. So if I look at the stocks and we look at the disconnection from IGV, and then we come here and we take a look at the Qs, and we saw what we saw with the hourly, and we're barely hanging on here. Does the stocks look like where we want to be? No. Does the stocks look better? Follow me, stay with me. Does the stocks look better than the Qs? Well, how would you determine the relative strength of that? I'm glad you asked. I'm going to give you a really simple way to do this, and you'll find this very helpful. We're going to tie this all together, guys. If the NASDAQ is at the 12 and the SOX is at the 22, what's stronger? The NASDAQ. The NASDAQ is now stronger than the SOX. So the SOX is no longer in charge. So what you would have to do is start running through various indexes and start seeing if you could find one that makes sense, right? Maybe it's the cloud. Sure doesn't look like the cloud. Maybe it's IGV, right? Maybe it is IGV still because they are above. Maybe it's those names. So you start cycling through those names. Well, that looks disgusting, right? So you kind of have to keep getting into this. How about XBI? Well, that's interesting. That moved today. So now what we have to do is go through the sectors and find out where we're rotating into, right? Because where I thought we were going does not seem to be where we are going. I thought CRM, we rejected there very clearly. Where did we reject? On the 22. Remember, Do we want to swing trade it? Yes. Who's in charge of it, bulls or bears? Well, there's a big, mean grizzly, I guess we could say right there, but polar bears are actually meaner. They're the only ones that will actually hunt down a man, believe it or not. But you can see that right there. And then the 55, you couldn't even get to institutional support. Let's take a look at crowd. That was going to be the big winner on the day. Now that is holding the 12. So if we had to go through these names, that might be something to look at. Let's get back to NVIDIA for a second, because why not? And it's probably what we really want to pay attention to, because as goes NVIDIA, goes the NASDAQ. That's what Goldman's been telling us all year. How does that look? I mean, that is pretty gross, right? So there's a couple of things that we should go over here. When I say that I'm holding core positions on swing or long-term trades, that would mean that I will hold a core and then I will trade around that. If you're looking at this chart right now and you're holding any swing position that you're down in, I don't know what to tell you. That's a really bad idea, because this can get a lot worse, right? So you always want to have the trade thought out ahead of time. So when people say, do you have core swing trades on right now? I don't have one trade on that's below any of this any longer. I don't. I have to get out. I don't have a choice. Even half core positions that I held over the weekend, I have to get out, even though I don't want to, because I have to follow my process. But the stuff like when I say I'm in a core and I say I'm back here, and people say, well, you're going to get out of the core because, if this gets smoked, like, let's be realistic. If you get smoked, a test of the 55 is not unrealistic. It's only 17 points, 18 points. It's nothing for that to happen, right? If that gets smoked, are you going to get out? No, I have no interest in that. That's not the game I'm playing. But from a swing trade perspective, you have to look at this now and go, okay, we broke the 12, so there's no swing trading anymore once I'm below the 12. I broke the 22, so who's in charge now? The bears are in charge. So I can't really look at this anymore and say that this is something that I have to be involved. We had a couple decent trades in it today, but candidly, we were just picking up pennies in front of steamrollers. And I can show them, but my whole point that I'm getting at here with them was all I was trying to do was we were buying these dips, making $1, and then moving the stuff to break even over, and we did it again here too. But all we were trying to do was get ahead of it. I'll just point these out real quick. So here at like 10:51 down in here, we bought, and I won't get into all the reasoning for it right now because I actually want to walk you through another trade. And I think these are the kinds of trades that I did with MicroStrategies that you're going to have to be doing for now. I'll explain why in a moment. But if you see right in here, all we did was we saw something, it made sense. I can walk through it in a different video, but we bought it, we traded it out. And then I just got to the point where I was making money, and then I just hit by 1 o'clock. I'm like, it's not doing anything. And we kept hitting these levels over and over again and rejecting. And that's not what you want to see. When you're day trading, guys, just a real quick tip, always just, when you see these demarcation lines, just drop a pin. That's all. Just drop a pin down and go from there, okay? And I think you'll get a better sense of what's going on there. But, if you see this low, I mean, that's obviously not groovy at all what's going on there. But anyway, if we see how this played out, then we tried again. At the end of the day, 244. We did the retest. I waited a little bit. I'm glad I did wait just to make sure of it. And then when I saw it, boom, we did it. Made like $1. I mean, really, but all I'm doing is picking up pennies in front of steamrollers, right? So people say, well, why didn't you short it? I really don't have an interest in doing that. Now, what would be interesting to me from a day trading perspective is if I rally to 121.40 tomorrow and then reject, or you get up to these levels, then yeah, maybe I do like a day trade for the day. I would be very apprehensive about just saying, oh, we just have to get out. Usually these are control bars. They do mark highs, and we have gone over this ad nauseum where AVGO, and then if you overlay AVGO with NVIDIA, I mean, I've gone over this so many times, I really don't even know that we want to go over it again. But if you look at AVGO and you look at AVGO's earnings, I guess we are going to go over it again, and you just mark those dates, it gets real clear, where NVIDIA peaks. Like it's pretty darn obvious. And it doesn't mean that that's the be all end all, but it just means that it peaks and then it goes sideways. And it's just the way it is. Now, it could be because that marks the end of the cycle. I don't really know. But it also, NVIDIA is ahead of itself technically. So maybe that's it as well. Either way, I think where we're going with this is when we look at the stocks, we can't really say that that's the leading sector. So at the end of the day, the more troubling thing for me when I look at this is go, what is the leading sector? Now, remember, the skew's changed. Now, for those that just didn't see this last time, I'm just going to walk through it. The skew determines the volatility. Nomura put this piece out a while ago. And whenever I get a really good piece of data that I think is really pertinent, I like to go over it with you guys and just say, hey, I think this is pertinent. You might want to pay attention to this. And don't worry about how the skew is calculated. I think the easiest thing for people to wrap their mind around or how If I was brand new and wanted to wrap my noodle around this and go, what are you showing me? Tell me what's going on, Rocky. All right, this is what we're doing. This skew determines the volatility. Is the volatility getting greater or not in the market? If the volatility is going to get greater, then tech is going to get whacked around. All right, now there's a couple reasons for this, but we're going to get into some of them. If they're tightening, if the Fed is tightening, the Fed needs negative wealth, right? Meaning they're raising rates. Demand side inflation. Hikes in QT means under-owning assets. If you have high cash positions, this doesn't require massive hedging, meaning you have no reason to go out there and do what? You have no reason to go out there and buy puts. Why would you buy puts? You don't have anything to buy puts. You don't have anything to buy puts on. You don't have anything to hedge. New, easier policy era about to begin again globally. So when we say what's happened globally, the easiest thing for us to remember is, and looking out there and going, okay, well, what did happen globally? Well, Canada cut rates, the EU cut rates. I think the UK's next. They're talking about it. We're on the chopping block. Maybe, maybe not. But at the end of the day, a new, easier policy could begin, which could mean a steeper skew regime. And we're already seeing it, hence it's blue. And what they're saying here is this is where we were in 24. And if you look historically, that is insanely low. There is a reason why people did not just buy all tech stocks in their portfolio. And the main reason was the volatility of them. And you're starting to see that skew kick in again, right? And everybody's overweight, the Microsofts of the world. And so the skew changes. If you look at the skew from 09 to 19 and look at where you are versus where you are here, if you were to measure this out, the average is like 20% higher. So if you think about that equating to the volatility of the move. So what we're going to have to wrap our heads around is, it's not, are we going to crash? Are we not going to crash? Okay, you got to get away from that. What you have to realize is the market, before the Fed intervened, you would have a correction. Every 18 months, you'd have a 10% drop on average, just for no reason, just because it was like a Tuesday. The market would just come in and be like, oh, we're overbought. And it would just drop like 5% or 7%. And names would get hammered. And that's why people had cash. That's why people own puts. We haven't had that. We've just had straight up buying. And what people are waiting for or thinking they're going to get is stuff like this. And they think this is the market, right? Like this kind. No, that's the Fed putting 1.7 trillion in the market. That's all that is, right? So it's very, very different from how the market's really supposed to work. So when we see these, we have to be cognizant of that's why this is going on. The other side of the equation that you have to focus on is we lost an enormous buyer. The buyer is completely dried up. Now, for example, if we take a look at the distribution of the buybacks that are out there right now, this is not my graph. This was actually put up by Goldman. But if you look at this graph, estimated blackouts beginning 6/14 with 50% of the S&P, all the corporate buybacks, they're done. They're in their blackout window. Assuming entry 4 to 6 weeks prior to earnings. So you're going to be like this for 4 to 6 weeks. That you're going to be dealing with this. And this is really important because if you go back here and say, well, 6/12, well, when did we have the last blackout period? It's not that your name that you're buying is in the blackout period or not. It's the fact that all of a sudden you have trillions of dollars in assets and the corporate market is gone. It's gone. They're done for now. There's nothing that we can do about that. And that's really important. So when we grasp that concept or we understand that concept, you could look at this and go, okay, well, that's a problem. Well, geez, when did that happen last time? Well, it just happened right around here. I mean, not for nothing, but this was the last blackout period. Let's get that off right there because that's exhausting. But that was the last blackout period right there. And I do think that's important. And like, well, geez, what happened there? And then you would go, okay, well, what happened for 6 weeks from, I think it was like the 12th or the 15th, something like that. It was in here, somewhere right around here. Let's just mark it here and say it was the 19th, but I think it was right around there, 3 months. And if you go out here and you go 16 days, and that would get you 20 days, right? And that's going to get you 3 weeks. And then we just go through it and go, all right, 30 days, and that gets you 4 weeks, 5 weeks. Let's go out to 6 weeks and go, what happened there? Okay, well, there's 6 weeks. Right, 4 to 6 weeks. Well, when did the buyback start? Oh, they started right here. Okay, and this is where they started. So is that something that we have to concern ourselves with? Yeah, it definitely is. Now, you still have major events this week. We have PCE coming out, GDP, Micron earnings, NVDA earnings. Like you have some big events that could drive the market. But at the end of the day, we'd be remiss to not talk about the skew changing, the fact that we just lost all leadership. We need to see leadership get reestablished, and we just don't have any. We can go look at XLF. that's trying to hold in there. But what we don't want to see is what's happening, which is this. Like, we don't want the SPY to lead. You don't want the SPY to lead. And that's exactly what's happening. Q divided by the SPY, and the SPY's leading. Okay, you don't want that. If you go here, and I'll just show you this very quickly so you can see, like, well, how am I supposed to know what you're looking at, or how am I supposed to determine this? If you go here and you set up a system like this, and anyone can do this, it'd be the easiest thing in the world for you to do to just screenshot these. I'm at Arete 20706 on TradingView. You can just go there and follow me, and I will post stuff. Eventually, I'll figure it out. I did post some scripts, but I'm still working on it. But when you look at this kind of stuff, you can see like the 20-day, percentage of 20-day, percentage of 5-day, 200-day, like where we're at. You can look at those things like super quick, right? Stocks above the 5-day and what's going on there. But more importantly for me is I just hit the change. And I just hit that change button at the end of the day and go, okay, they're selling tech, they're selling all of these, they're selling REITs again for some reason, and they're buying energy names, and they're buying biotech, okay? And then they're buying financials. So none of that makes any sense to me. Like, why aren't you buying the defensive names? And that's what's kind of interesting. Like, why aren't you buying the defensive names more? Like, why weren't they leading today, right? You go and look at like the big dogs like Procter & Gamble. I mean, it doesn't look awful. You did hit an all-time high, but not exactly running into what they need to run into. But a couple key things I really want to go over here. So I got a lot of really good feedback on the option, the more advanced topic. So I just want to give you another topic here, and I'm going to show you Gamma in action again so that you can see it, and then you'll be able to understand it a little bit better. And if you're interested, I can turn this into an entire educational video like I did the other price action. It wouldn't be that hard. If you're interested, just comment below. If you are on the wait list to get in the community, just be aware, please look for the email because they expire after 5 days. Trying to pack a lot in tonight, guys, because there's a lot going on before tomorrow morning. I wanted to buy MicroStrategies because to me, you buy MicroStrategies options into the dip. You buy it when the guy's concerned, when the guy is trying to figure out what's he going to do, right? When that market maker's out of position, that's when you want to buy these, right? You don't want to buy them here. You want to buy them here when the guy's out of position because you're going to get a better price. Okay, here, watch this clip live. I'm going to kind of go from now and just see where these open and see where we're at. Okay, so like the 1500s, yeah, like the 1500s are going to be there. That's kind of cheap. So we're going to buy some of these. You're only 30. All right, let's get involved here and see where we can buy some of these at market. All right, I bought the 1500s on MSTR. I bought the calls. MSTR, what are you doing? You're kind of bonking around, but maybe I'll gap fill. If I do, those things will kill it. So I'm already up in them. I'm just going to sit with them for now. So that's really the only thing I've done so far is just buy MSTR in those calls. And it's working so far. Those calls are now what? I paid 26, they're 34. I'm not doing anything with them. MSTR, what are we up on those calls? Oh, wow, we're doing well there. We're like 38 now? What's the stock doing? I've done nothing with the stock either. Okay, just give me that push. MSTR 34, give me that push, that real big push. Sold half those options at 33, paid 26. I wanted the push. I don't want it to come up to some level and then reject that level. I want to see the push. So I closed half of that and we'll go from there. All right, so I need this to really, really push. And if not, I might get out of the rest of it. And now we're hitting new highs. Nothing for me to do with the rest of them. I really, really, really don't want to sell those calls into weakness. It's like the last thing I want to do. Out 100%, break even. Made money on the first batch, none on that. I'm 100% out of MSTR, calls and stock. Now, I hope that was helpful. And what's so fascinating about that, later in the day, I bought the same options that I sold here at like 38. I bought them down here for 17, 18 bucks when he started to flip. Whether or not they work or not, time will tell. But they traded up twice. Maybe they work, maybe they don't. But again, I didn't hold them all day and hope. And we know why, right? From that, we know why, because people say, well, theta decay. Well, no, it wasn't just theta decay. Remember gamma. We went over this concept of gamma the other day. And just think about gamma as the speed limit. The speed limit is delta, right? And so the speed limit's delta. And the speed limit's 50, and then all of a sudden I go from 50 to 60. That's gamma, right? When are you gonna hit that accelerator the most? When's that speed gonna jump the most, right? On any trade, when's it gonna jump the most? Here, the panic, the sheer panic. I got to get in, right? And that's when it moves. That's why you can get out of options here, right? A lot better. You can get a lot better pricing here because you're going to get the gamma in your favor. Versus if you're looking someplace else. Meaning if I bought the same option here and I bought it here, even though it's an hour later, you're going to be like, oh, I'm going to lose the theta. You're not just losing the theta, the gamma is going to implode on you as well, right? Now, at the money obviously is going to be better, and we weren't at the money, but you want that push. You want the speed. When the speed goes the fastest, that's when you want to get in these trades. That's it.